The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon Eastern Time. 877-927-6648 is the number to call. And I did the first hour. Steve was unable to be here today, Steve Rhodes, so I did the first hour at 9 o'clock. Then a great show with Tom and Daryl, some lovely trades put on. Daryl was explaining things. In fact, let me just show you something. He did it in a 10-minute, I believe, AUD. USD. Oh, here comes the sneeze. Here comes the sneeze. No, yes, no, yes, no, no, yes. And based on the Chapman wave methodology from the low bar of the Aussie dollar contract at 8:40 this morning, down at 0.9212, there was a move up that went to 75.75. That went to a peak D at 1020 and pull back. D is what you really want to see. But not only that, look at the way the 9-period moving average acted as a support, and then it was acting as resistance. Look at the MACD, and just for illustrative purposes, I will just merely call it the green line is the faster moving average of the two moving averages in the MACD. And the red line is the slow one. And look how, while it was that distance between the slow and the fast was so big, look how the price held up. And then look what happened when it pulled back. Look what happened when the stochastic was above 80%. I'm mentioning this. Why? Because we have a special going on right now. Special that my eyes popped right out when I saw it. I couldn't believe it. I thought at first that this was a special that, first of all, I thought it was a mistake. Then I looked at it because we had discussed, but I didn't actually see the final thing. I thought that how could you offer, when we offer these webinars, the archive webinars at $149 each, I thought, what on earth is happening here? It's a 6-pack webinar bundle, Memorial Day special by Tom O'Brien, Basil Chapman, and Mike Comey. Memorial Day weekend only. Get 6 of our most popular webinars for the price of 1. Foundations of Options Trading, 2 hours with Tom O'Brien. Strategies of Options Trading, 2 hours with Tom O'Brien. Moving Averages, 2 hours with Basil Chapman. Stochastic and MACD, 1.5 hours, Basil Chapman. Candlestick Charting, 2 hours, Mike Comey. Advanced Candlestick Charting, 1.5 hours, Mike Comey. So I'm looking at this and I'm saying, that is what a great deal for the weekend, long weekend. You have 3 days in which to study whatever charts you want. And, of course, what you really want is to be able to glean. You want to pick up something that just immediately clicks with your own thinking, with your own trading habits, with your own methodology. And then all of a sudden you add this one thing, you experimented, because my belief is that I don't want you to be doing something and then kind of look up as if you're looking at me to say, is this what I do? It's got to become yours. I've got to turn around and say, hey, teach me this because it now does something a little different to what you've used it with your methodology. What's happening? So 3 days. No, I'm completely wrong. You'll have access to these 6 webinar archives for a total of 11 hours of education for 90 days, 3 months worth. Plus you get the course handout for each webinar, which is yours to keep. You must act now. This offer is only good through Memorial Day, Monday the 26th. And these courses sell for $149 a piece, and you're getting them for the $894 value for $149. Well, TFNN is about education, and that's what we do. There's another little bit of education. Look at this. The E-mini. Whoops, the E-mini, ESM14. On the 5-minute chart, same chart, makes a double bottom right here. Let me show you what I'm looking at. Makes a double bottom. Whoop, popped out. Right there, from the low that was established after the peak E-top in the Chapman wave, back at 6:05 this morning, after the run-up from about 3:30, goes to a peak E, pulls back, and then hits exactly the 1889.75, I think it was, 1889.75 low of 340 this morning. Hits it exactly. When? Hits it at 9:10 this morning. Then starts a rally that goes, all we do in the Chapman Wave methodology is we want to identify each higher peak. I'm going to show you this here. If you want to make a picture of this, that's fine, because I'm going to be talking about it because I had a question that I wanted to answer in a few minutes. So this is what happens. Each successively higher peak goes peak A. Then what I decided I would use is a peak B, phantom peak, because there were two parallel highs with a breakout on the third bar. So I like to be ahead of the game, especially if I'm trading the futures. And in the futures, when you're trading, I didn't trade this at this particular time. I was just about to, but I was on the show, so I couldn't do it. It would be hard to do. What happens is it went to the four successively higher peaks. But because of the phantom peak, I wanted to say that at this particular point at peak C1, which should unofficially is peak D, I called it peak C1 because it established exactly the same high later on. That's where I would take either profits or I would raise the stop if I had a couple of positions, and I'd raise the stop, take something off and raise the stop. Why? Because my objective has basically been hit, even though officially it's only a leg C, but in the phantom wave, I like to be ahead of the game, and it always helps me because if I miscalculated it in the short term, I only use this phantom peak, I should say, the predominance of the phantom peak is in time frames less than 10 minutes, 5 minutes or less. So that's a peak. I called it a peak C1 and a parallel high with peak C2. But because the green line, the fast-moving average, was still holding well, hadn't crossed negative, I anticipated there could be a retest of that high. And lo and behold, now we've got the official transcript. And what does it say? Get rid of all these guys. This is C, and this is B, and it's a blue B, and that's it. So look how easy the technology, the methodology works. It says, I'll teach you how you can use this to your best advantage. And at the same time, this particular technique of phantom peaks in C1, C2 says, I can still get you out in time. You might be a bit early, but at least you'll be ahead of the game in case there's a deeper pullback, because in fact that turned out to be a peak D. Well, the MACD is turning down now, but it's still not giving a sell signal. The RSI is, and the on-balance volume is saying, I'm holding okay, but I'm close to turning down. And the stochastic right there is starting to pull back from the 90 area to the 85.72 area. And this says, hey, it's a little bit toppy right now. All right, I just wanted to get rid of that, show it to you. There were questions about it. There's another question I'm going to deal with right away because today is question day. The question was, let me just see if I can get the exact question here. Right there. Nope. Right. Right there. How do you know? Why is this not peak A? Let me show you what I'm talking about. The question was, why wasn't this a peak A? Because you've made a trough. Well, by its very definition, until from a low bar of a well-identified low bar, until you actually make a peak, and now I can go back to my slide. What is a peak? So a peak says that you come down in a leg, and at some point, instead of making lower lows on the bar itself, you make a higher low. That says we've made a trough of some kind. From that trough, the moment you go above the bar that the bar that just made the low, the moment you go above that, that starts leg A. Even though I call it sometimes a gray leg A, it just says, hey, I've made a leg to the upside, but it isn't a, I haven't made a peak yet. It's just a leg, and it's way below the previous high, so I call it a gray A. In other words, it's It's a retracement failure mode. That's just an explanation that it can fail at any point because it hasn't gone to new recovery highs. So the moment it makes a peak as it did there, that becomes a peak A, leg A, peak A. Then the top has to be pierced. It can't be, if it's after the peak is made, you have to go 1 penny above to start leg B. And that number 2 over there of the SPY chart shows exactly what I'm talking about. Number 3 shows you C, and number 4 shows you D. So have a look at this. The reason why you could not get a peak here is because I have to wait. Let me show you. I'll expand it. Look, that's not a peak. That's still lower highs. That's not a peak. It's still a lower high. But all of a sudden, on the bar of at 4 o'clock on the 8th, that starts a little rally that goes above the previous high. So that's leg A. Because the following bar of 35, 45, 25 is now 35, 44, that makes a peak. So you have to wait for the turn before you can start the wave count to the upside. And then you have to wait for a peak before you can actually call it a peak. Or you got to wait for a higher high bar above the declining highs before you can actually start a leg to the upside. I'll cover that as we move along in different contexts. So that's what I wanted to show you. And now this is gone. This is very interesting. This is probably, it's unlikely to be a G. I'm going to put in a G/C. This says we could still, by day's end, maybe get a D or maybe Sunday night. This is still positive on the June E-mini NASDAQ future, the 300-minute chart. Oh, isn't this interesting? That's why you have to love the market, because there are just so many challenges. Let's go to our first caller. We've got Garo in Newport Beach, California. Garo, how are you?
I'm very good. How are you, sir?
Very well, thank you.
I'm calling regarding MasterCard.
Yes.
And again, I was waiting for that signal and sign. If you would use that sharp parabolic dots on weekly chart, you'll see that a few days ago it hit the first dot at the bottom, and to me it looks like the trend is going to change, and from here it's going to start to climb up towards that $84 in time, of course, but still that 5-day simple moving average hasn't crossed the 50-day moving average. So until then, it's going to go sideways, the way I think. Then once that 5-day crosses that 50-day, then from there on, it's going to go uptrend from that point.
Okay, I like your analysis. Let me explain what we're looking at to those listening. We're looking at MasterCard. MA is a symbol, trading at 76.55 of 78 cents. We'll be back, and I'll do the analysis with Garo, and then we'll also look at stock for Joe in Boston. So we'll be back. Basil Chapman, Tiger Technicians Hour. You hold on. We'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back, and I had a question. There's a question in the den. Says Garo seems to have his own system. I wonder if he can explain to us what he's looking at. He mentioned some dots. Well, what he's talking about is the, this is basically a formula that was set up. It's called the parabolic SAR. And I think of it as something like a Bollinger Band, a band itself, that says that once it breaks a certain level to of the dots that are going down to the upside, you're free and clear to move to the upside because the resistance is pierced. You'll see that in this particular case in the 120-minute chart back on the 11:30 on the 11th of May. That resistance pulled the price back down, and now it's at a fabulous move to the upside. Let me just put in my up arrow, and I'll tell you exactly where we are. So, Garo, are you in any trade now, or you're watching it?
Yes, sir. I bought 1,000 shares on Wednesday at $74.50.
Right.
And yeah, still I have it. I'm waiting to go up to $78. So the next resistance from here, mine is 78.13. The present resistance is 76.78. So probably I will get out at 77.50 or 78. But the point is that the 5-day simple moving average hasn't crossed the 21-day yet. So until then, I would say it's going to take some time, probably a week or 2 or 3, until that 5-day reaches that 21-day. If it does not cross the 21-day, then again the candle will go down towards the 50-day.
Right, then it fails.
$72.
Right.
Yeah. So until then, there is some play here to get to that $78 border. But my point is here that the weekly chart, weekly yearly chart, the first dot is at the bottom. So that gives the first indication that this is changing the trend.
Okay.
Until the 5-day crosses the 21-day. From that point, it's going to be a bull for a long time.
Okay, so what we're looking at, let me just find it if I can put it onto the weekly chart. There we go. Yeah, so the weekly chart actually is bumping up against it right now in the weekly chart, the SAR, as I've got it.
Yes, you see the first dot at the bottom?
Yes.
Yes, there.
Okay, now what I would be looking at is this. In my work, what we've done is a beautiful cup formation. It was a beautiful cup formation. It took a little too long. I would have been a little hesitant to buy. You bought it perfectly. I would have been a little hesitant only in that I needed to see that the right part of the cup was rising and it was sort of flattening out. That can go on for a while. So meantime, it had a real nice move 2 days ago. Yesterday was a kind of a resting day, doji candle. Now there's a breakout. But the moment this thing goes above, MasterCard goes above 76.71, if it goes to 76.72, the chart formation that I was showing in the in my CD introducing the Chapman wave back on the slide of number 92, it's called the wave count, shows exactly what would happen if this broke above that left side peak, because it would start C, and that's number 3. That would be number 2 going to number 3. Slides that I'm talking about, slide 92, and that would be the little boxes there. It would go from the second to the third box. And what would happen is if it went and it closed above 76.71, that would be very positive. Why? Because all of a sudden I can do a left side, right side price time match to the highs, and I'll explain in a minute what it is. Right here, and let me click new parallel, it goes there, and that says, and this coincides with what I'm looking at for next week, that there should be at least close to a test of the all-time highs in the Dow and the S&P and the NYA. So on the 28th of May, that's I think Wednesday or so, there should be a move that takes you towards 77.77, that little cluster of highs back on the 24th and 5th of March. That to me would be very good. If that occurs, then 79.83 is really my first upside target. And in fact, the moment it breaks above the high of peak B of 76.71, my target would be a little higher towards that 79 level. So, yeah, right. I think you're absolutely right. And now you're starting to hold stocks a little longer. That's very nice. Hey, congratulations, Garo. I think you got the right idea here. Have a great weekend.
You too, sir. Thank you.
Thank you. Bye-bye. We'll be back with Joe in Boston straight after this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks, we're back. We're going to be back with Joe in Boston as the Dow's up 49, S&P's 556. I think we might be making some kind of an intraday top here. I think this will be a pullback towards the end of the day. This is my thinking right now. And then we'll see what happens when the weekend futures opens up, and we come in on Tuesday. Joe, how are you?
I'm well, Basil. How are you?
I'm well, thank you.
I got a long list of things to do this weekend, but I wanted to talk to you first.
Good.
Hey, can you look at DOW for me?
So this is Dow Chemical, and let me just double check, because some of the chemicals have been on an absolute tear. Eastman Kodak, Eastman Kodak also up near the highs, but Dow is actually looking a little stronger than Eastman Kodak right now, EMN. So DOW is trading at 50.31. It's up 53 cents. You know, this is such an interesting pattern.
That's why I called, Basil. I knew you'd like this one.
Yeah, there was a peak G with a Chapman wave 2-bar reversal, 50.96 on the 25th of March. The next day, the high was 50.95. That 1 penny difference, so 50.96, and then 50.95. Now, this is fascinating. Why? Oops, I missed a 5 there. Because it pulls back from the 51 area and goes right down to 46.56. So that was 46.56. So that was about an 8 to 9% move. And then what happens is it has a rebound, and that rebound failed. And that rebound that failed, I looked at this and I thought, that is really interesting, because if it holds and then starts to go what I call the rectangle formation and starts in a rectangle to go to a peak D, and in this particular pattern, the rectangle as well as the cup says, there's a good chance that Dow should go toward, right at, or just above the previous high, and then it becomes vulnerable to a pullback. Not a major top or anything, just a pullback. Well, it's in leg, it made a peak C, had another pull. This is one of those stocks right now, there's a pattern that if you were to trade the Chapman wave, it could get you to D, but you probably wouldn't still be in the trade unless you got at the low and you just said, I'm holding it until I test 50.96. Well, at this particular point, all it needs to do, because it's just taken a push above the high of the 21st of 50.31, today's high is 50.37, all it needs to do is go above 50.63 for leg D. It turns out that you've got a buy signal that can go to a buy mode without taking out the previous high of 50.96. That tells me that there's a really good chance that the methodology that I use that says in this particular pattern, you should go toward, exactly at, or just above the previous major high, in this case 50.96, and then you should see some kind of vulnerability to another consolidation. It could even turn out to be a deeper correction, but at least it says there's a chance that the next downturn after that leg D, which I suspect is going to be made by next week, is formed. That's where you've got to be somewhat cautious. Well, it turns out that if it goes above, Dow Chemical goes above 50.96 by 1 penny, it starts leg D in the weekly chart with a cup formation, but a cup formation that's actually been filled in a few times and keeps pulling back from its highs. So that's a little history there. The MACD is just, it's not great, it's not good, it's not very bad, it's flattening out but negative, and the stochastic's only at 73%, and the daily is not confirming the rally. The monthly chart is fabulous. Boy, what a confusing thing to say. The monthly, the greater tide is still fabulous. But if it goes 1 penny above 50.96, it starts leg E up in the monthly chart. See, when I put this together with a whole bunch of all the other stocks that I'm looking at, as well as so many in the NASDAQ, for instance, if I look at Google, I'm jumping around, I'm talking chart patterns. I've got a D in the daily in Google. Where's my 120-minute chart? I believe that was also a D, and this is the same thing in many of the stocks, but it turns out when you're coming off major bottom, well, a very serious bottom, yes, you will get Ds. You'll get Ds all the time because you're coming off the bottom. They can recycle. But it says to me, when I put the package together, that there's enough room to make new highs. Dow Chemical could be exactly in that category. And then the beaten down NASDAQ stocks, which have had fantastic moves. For instance, Google has gone 15, what is it, what kind of percentage is it? From the low of 503.25, today's high is 549. That's almost 50 points. That's almost 10% in a $550 stock. So I'm watching this real closely, because if we've recycled, that means that these really beaten down momentum and NASDAQ type stocks could go for a number of weeks to the upside. So it's going to be really important how I'm putting Dow in that chemical. This is Dow Chemical in that category. I'm putting the Dow itself, INDU, same kind of chart pattern. It's got quite a long way to go from 1596 to 1673. It doesn't sound like much, but that 140, yeah, about 140, 150 points could be a real struggle. We don't know. But this is the most fascinating time, because you've absolutely produced, for me, a stock, very important chemical stock. The chemical sector has been on an absolute tear. Nobody even talks about it. I mean, this is basic economy 101. From the low of the 27 area, 26, 27, to double at 50, or not quite. It's less than double, but that's a huge move for a big company like that. I'm pleased you brought it to my attention. What I would say, are you long?
Yeah, I'm in it from lower. I'm just going to ring the register up at that 51 area. If it gets
Are you in via calls or the actual stock?
Yeah, a little bit of both.
Okay, great. Because if you're in the calls, what I would recommend is take the money off the stock and keep at least a little bit in the calls.
Yeah.
Why? Because if there is a big breakout and it's able to get to 52 in this move, that'd be really positive. That would say that you've raised the base, that the traditional way of looking at this cup formation is now more like a Chapman wave cup and ladle breakout.
Yeah.
Because normally you'd stop at the left side, look for that.
If it spikes above that 51 and holds like 51.50 for like maybe a good close, like that kind of bar, then maybe I'll sit in tight.
Yeah.
If it really spikes and holds.
Right. And in fact, what I would do if it spikes and starts to look like it's holding, you could think of the proportion that you would do of raising a stop, taking some off, raising a stop on your position, and then maybe take off one of the calls, because the premium of the calls will expand tremendously.
Right.
And any pullback after that means that premium will come out very quickly.
All right, Basil, great job. Have a great weekend, and we'll talk soon.
Thank you. And, hey, that was good eye. I'm pleased that they're coming back with this Dow Chemical. This is a very important stuff to keep on my radar.
Maybe you can put it into your Four Horsemen one day.
I don't, because it's not part of the Dow, but I do watch it periodically, because that and Eastman Chemical are stocks I like. But I'm going to make a note to keep it on my list for sure, because it's in a way it's a little bit like DuPont, kind of in the chemical area. And DuPont has almost the same pattern, also looking like it wants to test highs. Hey, thank you. Have a great weekend.
You're welcome.
Okay,
Bye-bye.
Joe. Let's go to Jerry in Boston. Hi, Jerry. How are you?
All right. How are you?
I'm well, thank you.
Google.
So do you have a position in Google?
Yeah. I bought it at 430. It went to 417, and now I'm just playing it by ear. I'm not a trader. I'm more of a long-term investor, but I thought this one got too low on value.
So Jerry, so you bought it and it went lower, but you still liked it, so you kept it, and now you're looking good. That's the way it is?
Yeah, but I'm still nervous because I worry about this ilk of stock that was overowned. But but yet if the market unfolds with a follow through above the highs, this is the kind of thing that the hedge funds will go back to.
Well,
they all love Google.
Let me just talk to two issues here. Number one, the decline in Google. Now I'm looking at Google itself. Do you have Google or Google L?
Google.
All right, that's what I'm looking at right here. And folks, so you're looking at a chart and it has letters on it, but that's because Google spun off half the company, I think it is.
I know.
So, okay, I just want to explain why my chart has letters much higher up. Those letters are higher up because I haven't notated this one. I have.
Oh, I see. Yeah, right.
I have the Google GOOGL all notated. That made a peak E at 614.49. Google made a peak E, I believe it was at 6. Oh, wait a minute. Oh, because it's split. It's at 614.44. Okay. Now what I'm looking at is this. Google is held very well above the 9-period moving average, but that's the monthly chart, and I need to see an entire month complete. So I can't talk about it other than to say that at this particular point, the MACD's fast-moving average, that green moving average right there, is still holding well, and it says there's a little bit of residual strength in Google. I'm calling it residual strength, and I have to say a little bit only in that it was a pretty sharp move for Google. This is the deepest retracement it's had in a very long time, from the 614 down to the 502 area. That's 114 points. that in points and percentage terms, that's a big move. But the candle that we're looking at this week so far, and it shouldn't change much by the end of the day, is a very positive candle. But the stochastic and the MACD, because they took such a beating on the way down, the weekly chart is going to take a while to get up. So this is what I'm looking at. Because you spoke to me about having held it on the way down, I'm going to suggest that if it starts on its way down again, that some part of your position should have some kind of a stop. And I'm not even going to talk about what it should be, but if you want to call me next week, maybe Wednesday of next week, let's give it a couple of days, because that's when I think we might be looking at some kind of a short-term top in the market. If that's midweek next week, I'll talk about the 539 to 537 area as probably being something that you need to watch. 534 definitely you got to watch. But in the meantime, I just don't see that kind of pullback yet. So let's see where it stops and where we do get a peak, because we're still a leg D, and it's 91% in the stochastic. MACD looks great in the daily. So the daily is going to have to take time and price to really improve the weekly. My suspicion is that Google has made some kind of a top of consequence. But that doesn't mean to say you can't get a good 35 to sometimes even a 50% retracement in a very desired. And this is Apple, Google. There are a couple of desired stocks by fund managers. Many of them did take advantage of the double bottom in the 502, 503 area. And a lot have just missed it because they thought, oh man, we're listening to everybody and we got a 20% correction coming, etc. And they just got suckered into to taking off a lot of their stocks, and now they're kind of stuck. So I suspect any pullback now will see some buyers. If the buyers fail, then we're looking at that 534 area as being the first real test to say, oh, we're going back into the trading range. Be careful. So I like the fact that you got in and then you held on, because that shows the longer term conviction. Now, if you're talking about holding the stock for a year, my suspicion is that even with a major pullback, even if it goes down to the 470 to the 450, 430 area, when the market comes back, this will be once again one of the big leaders. So I suspect that the price that you're in at is going to be a price that you can always get. You'll always get back to that price. That's just my thinking. We'll never know, because we've not yet had the very big caps of the New York Stock Exchange and the Dow do the type of thing that we had in the IBB, the NASDAQ Biotechs, and in the Biotechs, and in the big momentum stocks like Google. So they've already corrected. And my thinking has been, that's why I've been wanting to be for my subscribers in the TQQQ, which is 300% along the NASDAQ Qs, NASDAQ Trust Series, only because I think that there's momentum still to the upside. When that momentum dies down, then we have to be very careful, and that would include Google. And I'm going to just show you I'm going to show you something, Jerry. Look at Apple chart right now. If you're looking at Tiger TV, it's made that pattern that I call the stork leg, with a very strong leg up, then the body. And then I wrote the neck, and I made the neck and went to D. It's struggling to go from a D to the E. The E is really not much higher. I suspect that Apple might go into a trading range here with a limit of about 612 to the upside, and then 596 will be the big test on the downside. So, can you hold on a moment?
Okay.
I wanted to just put the little package together with the favorites of the NASDAQ that I'm looking at now, and what could happen. So I'll be back, folks, with Jerry in Boston. We're looking at Google. We're also talking about Apple and the NASDAQ itself. I'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi, we're back. Dow's up 54, S&P's up 6.32, and we're on with Jerry in Boston looking at Google. And so what I'm doing is just running through a couple of the real big momentum stocks. But Amazon's gone from 408 down to 288. I mean, that is a huge move to the downside, 114 points, something like that. So when I'm looking at this, I say, wait a minute, this is a bounce for Amazon? Surely it could get a 308.64. It could get to the 315.06 9-period exponential moving average. So that's another 7 points. That could be another 2-3 days work or 4 days. So I'm looking at this counter trend rally and I'm saying, is it just a counter trend rally, or have we established a low of consequence in stocks like in Amazon that say, hey, we're done? That kind of smash to the downside says that we've got weeks to the upside before we come back and do a retest? or we just might have started a new move to the upside. Well, I will know by middle of next week, because if Amazon and Google and Apple all start to really bump into resistance and they're not able to go much further, and you've got the IBB, which is the biotechs, which had a 22% smash to the downside. It's one of the biggest declines they've had. Not able to get much higher than the 237, 242 area. Then all of a sudden we're looking at something very different. We're looking at the chances are that finally you've got some of the, if I look at my Dow stocks, GE is made a peak E, and now it's just stuck in the weekly, D in the daily. You've got let me see, GE, IBM, same thing, had a very big move, and now it's pulled back. It's just stuck. Triple M had a great move and is holding well, but it isn't near the highs. It's a few points off the highs. And UTX, they should be much better than this. It's the same sort of thing. UTX is also acting okay. So all I can say is that treat it as a very strong counter trend move, but if we start to arch over to the downside and all of a sudden we start to get bad news, then we've got to respect that and say, hey, even a stock like a Google can pull back and retest again. So that's all I'm saying. So a great entry point, and you stuck with it. What I'm just suggesting is that we've got D here. How the next 7 to 8 points of Google unfold, and if the 540 support level is taken out, are going to be important factors next week. So I hope that helps you, Jerry.
Yeah, thanks a lot. Have a great weekend.
Thank you. Same to you. So, folks, let's just do this now. I'm just going to do this one more time as we're about to wrap up, because then you got Nico and Paige. Just a fabulous show on health, looking after yourself. Go to the front page. Check out that six-pack webinar. Even if you've done some of these before, for 149 hours for 3 months, to be able to go through these 6 webinars that are really focused. They are, in fact, it says right here, they are. Get 6 of our most popular webinar archives for the price of just 1. 11 hours of trading education. Go to the front page of TFNN. Check it out. I don't see how you can go wrong. Even if you buy it and you spend all 90 days just going through someone's particular technique until you hone it. To me, that's going to be really important in terms of your own education. That's why I think it's a fantastic offer that we've got at TFNN. So here's what I want you to look at. I think we're making some kind of a short-term top. I'm talking about daily, just kind of the way I'm looking at all these things. I just did it during the break. I did it for a question in the den. I've got the Qs in leg F, the IWM 120-minute chart leg D, SPYs in leg D, 120-minute chart, 120-minute chart diamonds on leg D. I suspect we could get some kind of a pullback into Tuesday morning, maybe all of Tuesday, and then maybe Wednesday we start up. Maybe it's Thursday or Friday that we look at an attempt to get to the highs. Most importantly, what I wanted to say is check out my opening call. That's the front page of TFNN as well. It's my very intensive daily newsletter, and we go through different things in my Traders Corner. As I said, we are long the Qs and nice gains. And we'll start to think of what we're going to do after that next week. So, thank you for being here, and have a wonderful weekend. Stay tuned for the program all the rest of the day, especially.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN,